Miss Kim, Miss Turner, how y'all doing? Wealthy Rising.
Greetings.
Good morning.
How was y'all weekend?
It was good. That one little hour difference still got me tired.
Yeah, I walked it off. I walked 2 miles today.
Okay.
So, my blood pumping. I'm ready to go now. Y'all can see my screen, right?
Yes.
Yep.
Hmm.
Oh, I don't see you sharing the screen yet.
No, oh, it's sharing. Let's go here. Can you see the screen now?
Yes.
I'm about to start the affiliates today too, so that's gonna be a part of the video. That way we can start getting this thing moving. All right, let me do this real quick. So today is March 10th, 2025, and this is the morning come up, which will be Mondays at 10 a.m. every week. So if anybody's looking to get more information about what Walt Knows Money has to offer or Block Cycle has to offer, Monday mornings, 10 a.m. Central Time, will be live. So you can do Q&A or just to see what it is for yourself. That's what this is. Okay, and then what you're looking at here is the school community. It's $49 a month to join, right? For anybody that cares about how much it costs, it's $49 a month to join. And since we're going to start off right now, I'll repeat it later, but let's go affiliates. So right now we're going to do 50%. Anyone that refers or gets someone else to join the community is going to get 50% monthly recurring revenue. So I want you to understand this. So if you sign somebody up and they pay the $50, then you're going to be making $25 a month every time they pay. Bam. Now, going into June, so June 11th, and I'll say this again, I'm sure over the next few months, but in June, we're going to move it to 60/40. So for everybody that takes advantage now, you basically get a 10% bonus as an affiliate for the next 90 days, right? Today's going to be the first day. And then for the next 90 days, you get your 40% plus the extra 10% bonus to help us build up the community faster and more. Like we got 190 members. It's $49 a month. The price of the membership will also be going up in the summertime. So this is the heads up for everybody. And all we do is we teach people the cryptocurrency basics. You will learn how to make passive income every day. You can get started in real estate with as little as $50. I'm gonna have information to help people to start building their credit, and then just to stack assets and create cash flow is what this group will help you with. Let me fix that. All right, so now everybody knows that's watching this, that's looking. And if they don't know, they can check it out later. Okay. Also, I want to highlight that I made it to 23,000 in the private bank, but because the market dropped, right? This is the day chart, and you can see the market has dropped about what? Let's see, what did it do? Look at that. So it's 35% drop since new moon started, right? And that's why I'm gonna kick this off. So new moon is new money. New moon means the market is going down. You can anticipate a bearish trend. All right. So regardless of what anybody else is saying, this is what I'm sharing my results. So I've already posted a video previously explaining how the moon phases and the moon cycles are working. And this is exactly what I've taken advantage of. So this is like my update, my follow-up, right? So since new moon has started, we 10 days in, the market has dropped, let's just say 35%, right? The average person is going to get liquidated. They're going to hit their stop loss. They're pretty much going to lose when the market drops this much this fast. But on the other hand, because we know we're doing the private banking, we're able to make money. So I'll get into that soon, but I just want to show the chart real quick to show you how the new moon is actually in full effect. And also something else that I wanted to share was the difference between retail investors and institutional investors, because some people still don't quite get that, right? How the market is actually affected by institutions as opposed to retailers. So anybody with a quick 50 grand, $100,000, they're not going to move the market as fast or as strong. They're not going to have an impact on the market like an institution. BlackRock, Chase, E-Trade, Fidelity, all of these big names, they have 20 million, $100 million that they can buy or sell. If they buy for 100 million, this is why you'll see something like this, right? Because these institutions are jumping in the market. So of course you'll see a 300% gain, out of nowhere. And then vice versa, if you see, these drops, this is because the institutions are making their moves. Anybody sitting around with a $500 account, a $5,000, $50,000 account, they are not doing shit. You know what I'm saying? They don't have no weight. So if you fall into that category, you have to understand the institutions set the trends. The institutions make the prices go up. The institutions make the prices go down. Retail traders, investors, they are only in a position to, one, be proactive, which is what I do mostly, or two, they're trying to react to what they think is going to happen, when it's going to happen, why it's going to happen. And for me personally, that's just a losing position. Some people succeed at it. A lot of people don't, right? So instead of trying to be a retail trader and play that game, I'm looking at it from an institutional perspective, but I'm only able to enter the market from a retail, point of view, right? Because I don't have that much cash. I don't have 20 million, 100 million to buy an asset and move the market. So we're only responding to these institutions when they decide to buy and sell and make big news and make headlines, and then people decide to trade the news and react to those different things. I prefer to already be in position. It's always about position, whether we're talking trade and we're talking life, it's always about position. So now that I've incorporated the moon cycles into me keeping track of the position, I understand that right now we basically got 7 more days, really like 5 more days or so of new moon. So we can anticipate, we can plan, we can be proactive that the market will continue to drop for a few more days, but also be in a position where we're accumulating more assets. We're buying up the dips. So then when full moon starts and the market starts to go back up for the next 2 weeks, we can look to start taking profit. We can look, to rearrange some of our positions. That's my personal plan, and that's what I'm going to be sharing and showing y'all over the next few weeks this month about how I'm using the moon cycle to include it in some of my decision making. And then as you can see here, like the market's down. I was just at 23,000. Now I'm at 22.7. So that's the proof in the pudding. But that's the market check. That's the moon cycle. And where we at with that now, I'll come back to that. Let's do the market check. So as of today, March 10th, the overall cryptocurrency market is worth $2.6 trillion. All right. And I'm going to say it again, like thinking about Forex, thinking about the stock market. Those markets have been around for a long time. And some people have made a lot of money. Some people have lost a lot of money. Cryptocurrency is the newest money in the world. It's the newest market in the world. It's the newest technology in the world. I encourage everybody to focus their attention there. Even the stock market is going to be using blockchain technology. Even the stock market is going to start being fractionalized using crypto. So just consider when the whole financial system upgrades completely, not these piece by piece, company by company upgrade. When the whole financial system is upgraded and everything is running on crypto, everything is running on blockchain, if you're not invested, then you will only be a user, right? Anyone that's investing is going to benefit more than the average user. This is why all I do is invest in cryptocurrency, right? Plus the returns, as an example, like I just showed, you're not going to see a return like this. This is a day chart. Get the ruler. Let's just go from November 4th to December 3rd. That's a month. You're not going to see a 565% gain in the stock market without having some inside information, without following and doing your due diligence and research for a pretty long time and actually seeing it before it even happens. It's just not going to happen. Like, it's mathematically not going to happen. The average return on any regular investment is, let's just say, 10%. Any regular, consistent, steady investment is only going to give you 10%. Cryptocurrency specifically is the only asset that exists right now where you can just buy it and hold it and be able to see a 500% gain or return in a short period of time. Obviously, that means it's risky, because just as it can go up 500%, you can go down 500% too. This is why I encourage people to actually learn it, study it, because there's a way for you to, you don't got to make the whole 500%. You can just make the 100%, the 20%, right? And then take your wins. Then come back and live to fight another day. Like, it's all about, risk, tolerance. It's all about all of these different factors. But the point I'm making is, being a retail investor, your best bet to make money investing will be in cryptocurrency. It's more affordable, it's cheaper, it's faster, and it's actually more transparent than the stock market. Stock market has periodic statements that are due, reports that are due. But with cryptocurrency and blockchain, everything is available to you to do your own research in real time. You have the control, you have the custody. You don't have to ask for permission. You don't have to get granted access. You don't have to make a certain amount to qualify. None of those thresholds, none of those holes or hoops or red tape applies with crypto. So I encourage people to actually start looking into how this thing works and why and how and everything. So, for example, the volume over the last 24 hours is $124 billion was really sold, right? $124 billion was probably bought and sold in the last 24 hours. 124 billion. That's 119% increase in the activity over the last 24 hours. Something to just keep your eye on. Like, that's one of the things that I mainly like about crypto is the volume. This is where the transactions are happening, right? Transactions are not happening that big in the stock market. Collectively, yes. Overall, yes. There's a lot of money in the stock market. There's a lot of money in the real estate market, a lot of money in the foreign exchange market. However, you're not able to capitalize off the volume, even with leverage, as much as you could by owning crypto. With crypto, you own the asset. I can't stress that enough. When you get into finance, there's levels to finance. And then you're going to reach a level where, okay, you have money. But once you have money, you have to learn and focus on ways to continue to secure your money, save your money, grow your money. But if you don't have money, you're steady clawing and trying to figure out a way to earn a buck. That's one of the things that I personally am confident that I have solved for people. Like, how fast you make it is up to you. How much you make is up to you. But there's a way for you to consistently make money every day. So I'll hop on that in a second. But market check, Bitcoin today under $80,000. So that's a good thing. Remember, Bitcoin under 100K is a good buy for anybody that likes Bitcoin. Ethereum almost at 2,000, XRP almost at $2, Binance under 600, Solana under 125. Your stable coin, your favorite stable coin, USDC. And then remember, anybody that's following me or that's inside of this block cycle should be holding USDC heavy. And I'll show mine real quick as an example. USDC heavy. I'm heavy on USDC because I want to be able to take advantage of this, right? I'm heavy in collateral. I have a heavy USDC collateral so that I'm in a position for this 36% drop, right? I get paid as the market's going down. And this is how, because I'm heavy on the USDC. Why? Because it's not going to drop in value. It's basically $1, 99 cents, 100 cents. It's basically going to hold that peg. Dogecoin in the tank, Cardano in the tank, Pi in the tank, Tron in the tank. Basically everything is down, right? You see things are down 20+%. Right, and this is the overall market is down. So all of these big boys are down. And this is the opportunity for anybody that knows what's going on to get in there, buy the dips, position themselves, make some money so that when the market reverses, when the market goes back up, when people are getting happy again, people want to invest again, you get a bigger bang for your buck. Like everything is down. So there's no confusion. So it doesn't matter. Like that's another reason why I'm not so, I'm not a stickler for, oh, you need to be investing in this coin and that coin or this or that. Like I'm not chasing any one of these specifically. I don't care about any of these cryptocurrencies specifically. I care about how can I benefit from the transactions on any of them. So I could pick any of these and I want to know how am I able to benefit from the volume, right? How much are these doing? Bitcoin's doing 50 billion in transactions. Ethereum does 28 billion in transactions. XRP 8 billion in transactions. Solana 5 billion in transactions. Like that's something that I personally care about the most because we get paid based on the transactions. If there are people buying and selling, there's a way for us to get paid, right? And then I'll explain that again using the chart. Whenever people are selling their crypto, because I'm into private banking, I'm borrowing that. I hold it and it's my debt, right? So if the price of the debt is going down, if the price of the asset is going down, it's benefiting me to owe less. And it's easy for me to position myself to go up when the market goes up. I'm more concerned about how to take advantage when the market goes down. The most money is made when the market drops. And a lot of people miss that because they're all so hopeful, speculating, guessing, praying that the market's going to keep going up. No, you should want the market to go down so you can get a discount, you can get a better deal. But that's one of the difference between the retail investors and institution investors. This is also how I'm incorporating the moon cycle into what my strategy. That's basically your market check right there. I've already shown you that we will be doing the, let me show it again. So we now have affiliates for anyone that is a part of the community. You get 40% for referring people, and then we're going to add that 10% bonus for the next 90 days. And then it'll be a complete 40% off of anyone that you refer. When they pay their monthly, you get your percentage. And this is how you can turn learning about crypto into a form of passive income, into an income stream. All right. And we also have a 7-day free trial. So you can basically tell somebody they can learn how to start making money every day using crypto for 7 days for free. And as long as they lock in, stay in, and stay committed, they make money, you make money. We all eat, we all working together. I mean, it's as simple as I can say it. We've been doing this for a while now. What else I got? Oh, and then for those who are more advanced, want to take things to the next level, I'm going to be turning all of my one-on-ones into mentorship. So $500 one-time fee. You'll get access to this school community where I'm teaching you. We're going to have the weekly calls. We create a game plan for you. But that's what this will be. So for anyone interested, reach out to me. I'm still building it out. So you got time to hop on that. Other than that, my main focus right now is to continue building up the Block Cycle community. Shout out to Signing. We're going to be working on some more things to help us scale going into the spring. And that's all I got to ramble right now. Anybody got any question, comments, concerns that they want to add? The mic is open. Let me see. Okay, yeah. All right, y'all can unmute yourself. Anybody? Nobody got any questions? Nobody want to add anything?
So, yeah. My bad. I'm down here fixing the hot water.
All right, what's going on, Chris? How you feeling?
Man, I'll be feeling a lot better when I get done with all this physical labor.
All right, well, somebody got to do it.
I'm telling you, man, but somebody else need to be doing it. Like, I fixed the basement from flooding when it rained, and as soon as I did, the hot water heater sprung a leak and it flooded again.
We got a call Wednesday, right? I'm gonna be on this Wednesday.
Yes, we do. We got the well talk, and then we got the podcast that we finna start doing too. I think we're gonna. I don't know if we're gonna. I think Friday. Like, all right, we really need to get together and just like decide what the best day for that is.
Okay, I'll reach out to you later. We'll chop it up.
All right.
Anybody got any questions? That's what I was waiting to see. Because if not, I'm gonna show one more thing and then I'm gonna skedaddle. Get this day started. But for private banking, let me put this on wax for anybody that's private banking. Reggie, I see you on the call. You probably are at work. So, all right. So I made it to 23,000 yesterday. Market dip. Now we at 22,700. All right. So I'm gonna take this as an opportunity. Obviously, I'm heavy to USDC. I got rid of my Ethereum, my AVAX, my Solana, my Chainlink. I converted all of my extras into USDC so that I could be in position for this, right? Like I was able to notice that was about to happen. I know we on the new moon, so I wanted to be as heavy on the USDC as possible. So I just converted all of my other collateral assets into USDC. So now as the market's dropping, I'm making money, but as you can see, the market is actually pumping up a little bit right now. Algo was just at 19.7, so now it's at 1986. So just because I've noticed that, I'm going to knock off I'm going to knock off which one? Let's knock off some of this Solana, right? I'm going to knock all of it off. And this is just for me to share with y'all how I'm doing this. So by repaying the Solana, we know, and let's just go over this real quick again. Look at this, right? So I've been holding this account. Y'all been seeing me. Let me go back. Like I got $16,000 in debt, right? The average person is afraid of debt. This is $16,000 in debt. 12,000 of it, almost 13,000 of it is stable. So I'm not really afraid of it going to be growing on me. It's not going to be growing on me, appreciating on me, because most of it's stable. But then these other assets that have been fluctuating are down, right? Al goes down, what, 36, 35%, right? In the last 10 days or so, 5 days. 1, 2, 3, 4, 5, 6, 7. Last 10 days, let's say, it's down 36%. But then we have AVAX, basically a similar chart. How much is AVAX down? Let's see, another 29%. How much is Chainlink down? Let's see. Roughly the same, almost 24%. What else we got? Solana. You know, we got people that love their Solana, right? Also down another 30-something%. So the point I'm making is I own all of these assets as debt, right? I'm holding my debt in these assets. So that means all of these have just dropped down about 30%, right? And in fact, let's even look at Bitcoin real quick. Let's look at the big one. Bitcoin also only down about 15%. So if I'm holding my debt in Bitcoin, my debt would have went down 15%. I'm holding my debt in Algo, it goes down 30%. Which one would you prefer? I would prefer Algo because it dropped more. I lost more debt. It cleared up more equity for me. The benefit of private banking is you get to diversify your debt. So now I was able to lose 30% of debt here, 15% of debt there, 20% debt there, 30% debt there, like for an average of basically 30%. My debt dropped an average of 30%. None of the current debt that you hold traditionally is going to decrease. It's only increasing. So another reason why I like private banking, like to be in control of my assets. This is custody of the asset. So now I'm able to earn interest on my assets. I'm basically lending out my crypto to the market. It doesn't matter if the market's going up or down. I'm earning compound interest because I own the asset and I loaned it out. Also, on top of that, when the market does go up, all of my assets will start to appreciate. Like you guys will see that I'll be bringing these back. But now, once I start to buy my Ethereum, buy my Solana, buy my Chainlink again, I'll be buying it at a discount, right? From a 30% discount, let's just say, from recent high. So that's the benefit of doing private banking. Put that back on there. Okay, so back to folks finance. Let me do this real quick. So what was I about to do? I was about to cancel out this. So we know Solana's debt went down 30%. So I'm going to just take the opportunity, just cancel out that whole debt, since I know it's 30% less than what I would have had to pay previously. And then by doing that, liquidation margin goes over 10%. And remember, anything over 10%, what? We can borrow again. So I'm going to borrow that 27 bucks, right? This is a free $27. If I wanted to just keep it and go buy gas or buy lunch or something, I could. But instead, I'm focused on the big goal, which is to reinvest it. Also, I was at 22.7, so that $200 and change that I just used to repay my debt was basically me taking unrealized gains and canceling out a debt that was 30% less. So I made money on both sides that way. I used unrealized gains because it's unrealized because I didn't cash it out. I didn't take profit. I didn't go spend it or use it. I used it to cancel the debt, which is something that I owed and I still had to repay eventually at some point. So that took me back to 22.4. And now I'm just going to put this on here. And now I'm just going to add this back to my collateral, that $27 that we just borrowed. Let me refresh this. I'm going to add that back to the private bank and just continue to grow the account. So you still see me. I'll probably pop back to 23,000 by the end of this week. But as of right now, the goal is to just continue to add assets. So we see Algo's back at 20 cents now. So any of the Algo that I buy and add to collateral, I'm going to be looking for it to go appreciate from 20 cents. So even that $27 that I just borrowed, I'm going to turn that into Algo, $29, right? As USDC, I'm going to turn that into Algo at 20 cents. So as Algo appreciates over the 20-cent mark, I know it's going to grow my collateral. My collateral is going to appreciate. That $29 now works for me in Algo, even though I borrowed it from here. I'm going to borrow some more USDC. Another $13 that I'm borrowing. So we just borrowed 27. Now we're borrowing 30. It's basically $40. But instead of reinvesting this, I've decided to pocket that. So I'm going to pocket just $10 of this. And that's going to take my deposit to 84. So the goal is to just put $100 in my deposit right now today. This is me practicing making that $100 a day. So as long as I have my money inside of the loan working, going up and down, going back and forth, I'm able to borrow. And then instead of reinvesting every single dime, I'll reinvest most of it. And then I'll take what I want over here to deposit, where I'm going to start stacking a $100 a day. So y'all can, I'll make another video so you guys can like see the follow up with that. But that's the overall plan. That's the gist of it. That's what I'm doing. Any questions, comments, or concerns after that?
Yep, I got one. So for the most part, for like the membership drive or getting more people in tune, one of the ways that we can simplify it is we're using the unrealized gain to build the private bank, right?
Yes, that's correct. And you swapping collateralized. All right, say it again for me, Josh, so I can make sure I understood you.
So pretty much like new people that are coming in, they're less familiar with the platforms. One of the easiest ways to get them to understand what's going on, pretty much summarizing it, saying, hey, we're using the unrealized gain from the market to build up that private bank. Because a lot of people, they'll pretty much use that borrowed balance and go cash out and then never really think about it or never try to increase their liquidation margin. So I just was thinking that'd be a good frame of reference for folks.
Yep. Let me do it again. So, because I see opportunity. So whenever the market's going up, the liquidation margin goes down. So I see that there's some opportunity here. Just because I've been doing this long enough, I see opportunity. So I'm going to do that again. But instead of repaying, I'm going to do that. I got rid of that. I'll get rid of $100 in Chainlink. Chainlink's pretty good, pretty volatile. Got some nice value. So I'm taking $100 of unrealized gains again and knock down the Chainlink debt, which also went down like 20-something percent. Like all of this went down 20-something percent. If I wanted to, I really could just wipe it all out and start over fresh, which I'm actually debating about doing. But either way, then what? I'm able to borrow $15 more, right? So think about this. When you repay your debt, I'm looking at it like cash back. Whenever you repay, you're able to borrow again. You're able to get something out of it just because you chose to repay. Now, you don't have to repay. That's another thing I used to always tell people. You don't have to repay if you don't want to because you borrowed the money from yourself. But it just makes sense to, at some point, learn when it will be a good time for you to repay. And one thing that I've noticed is when you repay, you basically get that like cash back. So now you could decide, well, I'll repay, I'll take what I'm able to get cash back and reinvest that. And this is all I do. Like, remember, I don't have a job. Like, I don't work. This is all I do. And when I get done with here, I'm about to go grocery shopping. I'm about to go wash the car. I'm about to go have a meeting, talk. Like, that's it. And, you know, and I'm making couple $100 a day doing this. And I really want other people to do the same thing. Take it serious enough to actually put yourself in a position to do this. There are no minimums. You can do this with $20, $100, right? Like Reggie's on the call. Reggie's been going hard. He about to crack $1,000 if he didn't already in his loan. Will, I told Will to get on the call. Here's an example. He said, everybody check your liquidation margin. His liquidation margin is at 3%, which is close to being liquidated, which means he'll lose all his money if it goes to zero. And he only has a borrow balance of $122, which means his collateral balance can't be like more than $250, $300. So, but there's something off about the way that his assets are allocated. And I can tell that just from his borrow balance and how low his liquidation margin is. And his liquidation margin is so low because he's not positioned for a drop. He's only positioned for an uptrend appreciation, because if his loan is set up properly, he'll benefit when the market is dropping as opposed to feeling like he's under pressure or in danger when the market goes down. Like, I love when the market is going down. And not to put her all the way on Front Street, but I'm proud of this. So I'm going to show y'all a little bit. So shout out to Shanrika, right? She probably couldn't hop on the call today, but this is a testimony right here. So let's go back to the beginning of February, roughly. Let's just go here. Bam. So she had 2,600 at the middle of February, Valentine's Day. And then now, so it went from 2,600. I had told her, like, can you start telling me when you, what's the new update on it, right? So, bam, where is it? So 4,300, February 17th. Then 4,300 again on the 19th, 43.81. The market dip. She said, hey, it went down from 43.81 to 43.61. That's all. It's just the market dip, nothing major. Then she comes right back, 4,400. Okay, and then I just told her, just keep showing me this. Like, this is her growing her own account every day. 44.65. 46.88, right? And this is every day for the most part. It's growing on its own. Once you get there, the money's gonna work for you. 46.52. 53.96, right? Because some of these days the market did some pumping too. 53, basically 5,400, 54.22, 54.44, 55.64. Like, yeah, I'm letting y'all see with y'all own two eyes. Like, somebody else is doing this at a higher level. Like, my goal is to help her get to 10K, so she's able to start pulling that $100 a day. It take money to make money, but if you only got a few dollars to start with, learn how to do this, because you can take your few dollars and grow it to a few more dollars. That's the whole thing, just learning how to grow it. 55.98, 5,600, 57, right? Like, and I'm making my way to 22,000 at this time. And then, bam, 57, another market dip, 5,800, 58.86, 5,900, 58 market dip, 57. And mind you, when the market is dipping, because she was just at what, 58, 59 right here on March 7th, she was at 5,900, March 7th. It's only the 10th, but now she's back to 5,700. And like I just said, watch the dip. The market's dipping. This is a perfect time to readjust your assets, buy the dip, get something for the low, for the cheap, right? Like, this is opportunity. Most people are scared. Most people are losing right now because they don't have the knowledge to see the opportunity that exists when the market's red. Let me see. Wait. Trade deal. So I'm looking to see this thing go down maybe a little more, and then it's going to come back up, and then we'll be talking about uptrend. But right now, new moon is downtrend money. I know a lot of people have been with me long enough to understand when I'm talking about downtrend money. This is how we get paid when the market is dropping. It really don't get no sweeter than that. All right, so I'm going to leave y'all with that. If anybody got any extra question, comments, or concerns, reach out to me. Like I said, from now on, we got a commission, we got affiliate program, referrals. If anybody wants to just help us build this out, opportunities on the table. Okay? And I'm out of here. I appreciate y'all for tapping in with me.
Much love, Walt. Appreciate you, man.
All right.